ASML Holdings, one of the companies in my portfolio, just released their latest quarter's earnings where they actually beat on top and bottom lines, but we can see just a few moments before market open, the stock is down by about 8.3%, set to open at about $754 per share. So before we see this drop, the stock is already down about 22.62% on the year. And complete transparency, like always, ASML is a position in my personal portfolio that I've been growing. If we look at my growth chart, I'm currently up about 23% on this position. Now, I'm a huge believer in ASML for the long term, but a lot of people don't seem to understand just how important this stock is to the semiconductor and AI ecosystem. I was talking about this over on dividendology.com just the other day. Look at this. No ASML, no EUV lithography. They're one of the only companies in the world producing this. No EUV lithography, no Taiwan Semiconductor or Intel. Without these companies, there's no NVIDIA GPUs, no Apple or Qualcomm chips, no iPhones, no cloud servers, no ChatGPT. I think you get the point. So without ASML, the entire way that we live our day-to-day life changes, and this is a great chart showing the AI semiconductor value chain. At the end of the day, essentially everything is tied back to ASML. And because of this, there is massive earnings growth projected for this company. In fact, if we go and jump over to the sensitivity analysis and look at the earnings growth projections for ASML, the data will load in, and if we go ahead and zoom in and look down here, we can see through the year 2029, analysts are projecting close to about a 16% earnings per share compounded annual growth rate. That is rapid earnings growth, and like you would expect, because of that, the PE ratio for the stock is quite high. The forward PE ratio is sitting at 30.29. So okay, we've set the stage, let's dive into this earnings report and see what's going on. What's the reason for the sell-off? Now to start, let me be clear, I'm a huge believer in ASML over the long term, but this sell-off doesn't surprise me. In fact, sell-offs during earnings reports for ASML have actually become quite common. If you're based in the US like me, then they actually released this earnings report around midnight last night. And last night on Twitter, I made the joke that by the time I wake up, it'll be time to buy the dip. And what do you know, it certainly is, in my opinion, time to buy the dip. So what we can see in their earnings report is, yes, they saw a beat on earnings and they saw a beat on top lines as well. And to add on to this, revenue's up about 23% year over year. Quarterly net bookings in Q2 was about $5.5 billion, of which $2.3 billion is EUV. If we look at the outlook, ASML expects Q3 2025 total net sales between $7.4 billion and $7.9 billion, and a gross margin between 50 to 52%. ASML expects full year 2025 total net sales increase of around 15% relative to 2024, prior to be between 30 and 35 billion with a gross margin of around 52%. Prior was between 51 and 53%. So let's break this down and get an idea of where they've been in the past. If we go ahead and jump over to our screener, we'll come up here and plug in ASML. Like you would expect for a stock growing so fast, revenue per share in 2014 was only $13.40, 2024, $71.86, so just massive growth during that time. The same is true with earnings, but look at return on invested capital. Again, this is one of the key indicators of a high-quality company. It's letting us know basically what type of return is the company get on the projects they're investing their capital into. As a baseline, we typically want to see 10%. High-quality companies should be hitting 20%. And ASML, over the last 4 years, has been at 25% or above, so it's extremely impressive. On top of this, if we jump over to the profitability sheet, pay close attention to the gross profit ratio. The 10-year average is about 47%. Last year's came in at about 51.28%, and what we just saw from management is they're expecting gross margin for the full year 2025 to be around 52%. So it's still increasing. Now, you might be concerned with some of the bumpiness of this gross profit ratio, but you have to understand basically the business model behind ASML. We have to remember ASML sells EUV lithography systems, and these are massive systems. They're extremely expensive, and because of this, they don't have to sell very many each quarter. In fact, look, new lithography systems sold in Q2 of 2025 was only 67. So the reality is the timing of the sales of these can actually highly impact the gross profit ratio, but it's still clear it's improving over time and it's right where management wants to see it, and they're projecting it will continue to increase. So when you have a company that's growing revenues at a high rate and also increasing the gross profit ratio, that's a really good sign for the bottom line. Along with this, of course, I do want to touch on the fact that this stock has been a pretty good dividend grower over the past few years. We can see that starting dividend yield, yes, a little bit below 1%, but look at the dividend growth over the past decade, 23%, over the last 5 years, 18%. And these types of dividend growth rates could actually be sustainable moving forward because they're projected to grow earnings and free cash flow at such a high rate. The reason they've been able to do this in the past is because look at the 10 and 5-year free cash flow CAGRs. It's just absolutely mind-blowing how fast they've been growing free cash flow. And then on top of this, one of the things that went a little more under the radar in the recent earnings report was not just the fact they're growing dividends, but they're buying back shares. And just through the first 2 quarters of 2025, they've already bought back more shares than every single previous year. Now, we have to remember, share buybacks are only effective when done at an undervaluation. And if we look at the share price for ASML over the last quarter, what we can see is they've been trading at some of their lowest prices that they've seen in years. So this was a prime time to be performing these buybacks. These buybacks were perfectly timed. That's oftentimes not the case with a lot of tech stocks who will buy back stocks regardless of what's going on with their share price. But okay, you've heard me say enough positive things about ASML. What's the other side? Why is the stock down almost 10% now in open hours? Well, really, it came from a statement from the management team. ASML slumped after warning it is unable to confirm 2026 growth amid geopolitical woes. So let's just take a look at the quote. Looking at 2026, we see that our AI customers' fundamentals remain strong. At the same time, we continue to see increasing uncertainty driven by macroeconomic and geopolitical developments. Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage. So the huge scare is tariffs, its macroeconomic environment. So overall, when we talk about this earnings report, ASML did deliver solid numbers and strong bookings. Demand still looked very good moving forward, but the tone for 2026 was decidedly cautious. Obviously, that's not the type of quote that investors like to see in an earnings report. But I'm going to say what I've been saying in pretty much every single piece of content I've been making about ASML over the last year or so. You have to get used to this type of volatility if you're going to be an owner of ASML. This isn't the first time they've seen this much of a fluctuation in share price, and it won't be the last time. In fact, if we just zoom out and look at the past 5 years, we can see at one point in 2021, up to $888, got all the way down back to $379. At one point after that, got up to about $1,100 a share, and now it's seen another huge sell-off, a little bit of a bounce back, and then another sell-off today. You cannot view this stock as a short-term holding. There's too much volatility. But the question is it still an opportunity over the long term? Well, let's consider a couple of different things. Now, we've already seen on the sensitivity analysis, projected EPS CAGR, even if 2026 is lower, is still sitting at about 16%. So let's start by using a reverse discounted cash flow analysis. What this is doing is telling us how much free cash flow growth the market is pricing into ASML. Now, like always, you can download any of these spreadsheets and get access to the ticker data add-on in Google Sheets. It allows you to automatically import stock financials straight into your spreadsheet. It looks like the current price hasn't updated yet from market open, so let's go ahead and come over here and refresh this. And we can see the share price is now down to $740. So let's see how much free cash flow growth is currently priced in. If we bump this up to 10%, all of a sudden the reverse DCF price per share is $6.56. If we bump it up to about 12, all of a sudden we get above the current share price. So if we bump it down to about 11.5, we start getting closer, and it looks like at around 11.7, maybe 11.8, we get right at the current share price. So the market is pricing in 11.8% free cash flow growth for ASML over the next decade. Keep in mind, earnings projections are still quite high at about 16%, and along with this, the company converts most of their earnings into free cash flow, as we can see historically over the past 5 or 6 years. So we shouldn't see a whole lot of disconnect between earnings growth and free cash flow growth. If we keep moving forward, let's look at our sensitivity analysis. We'll zoom out just a little bit. Let's just go with the average analyst EPS CAGR of 15.81%, and then we'll assume a PE ratio that's about 16% lower than the historic average for this company, right at about what the company is trading at now at 30. What would our results look like? Well, we can see by the year 2029, our price target would be about $1,479, giving us a total return of nearly 100% and a compounded annual return of nearly 15%. So over the long term, even with some headwinds in 2026, things still look quite attractive. But let's run it through one more model. Let's run it through a discounted cash flow analysis. We'll jump over to my stock valuation sheet and plug in ASML, and let's look at a discounted cash flow analysis for ASML. Now, we can see if we assume 16% free cash flow growth rate moving forward, we apply that 16% growth rate to the future free cash flows, find the present value of those future free cash flows and add them together, add company's cash and cash equivalents, subtract out total debt to get equity value, divide by shares outstanding, and we come to a DCF price per share of $974.53, which is about 31% higher than the current share price. So if we jump over to the output tab, let's apply a 10% margin of safety. Our acceptable buy price is about 877, so we're still within that buy range. With a 20% margin of safety, the stock is trading very close to that acceptable buy range. So I'm still bullish on ASML over the long term. You have to understand how integral they are to the AI semiconductor value chain. But with that being said, you absolutely have to get used to this type of volatility. I knew going into this stock, we were going to see these types of bounces. And that's not going to change in the coming years. And there's the potential that in 2026, sentiment around the stock gets quite low. But if nothing changes about the long-term prospects, the long-term growth rate projections for the stock, then I'm still a huge believer in them in the long term. And along with this, they're going to continue to grow that dividend, at least that's what the management team has told us. So go ahead and let me know what you think of ASML in the comments down below if you plan on buying or selling. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.